Google is up 5% in after hours trading after the company released a strong third quarter earnings report. The bears on Google have some explaining to do because every line of Google's business is continuing to grow at double-digit growth rates. So in today's video, I want to quickly go through Google's earnings report, share the highlights and lowlights, and give you my opinion on the valuation of the business today. All of this is to answer the question of if Google stock is looking cheap or expensive after this earnings report. So with that being said, let's hop right into the video. As always, I went through Google's earnings report and took screenshots from all of the highlights that I found, so let's go through the Daniel Pronk slideshow. So right away, we can see that Google's revenues increased by 15% year over year to $88.3 billion. Google Services revenue increased by 13%. Google Cloud revenues increased by 35% to $11.4 billion now. Total operating income also increased by 34% year over year, and net income also increased by 34%, and earnings per share actually grew by 37% because Google is also buying back shares. So right away, this looks like a great earnings report from Google. And again, literally every metric is growing at double-digit growth rates. So let's continue on. This next screenshot shows us the actual values here. So revenues again came in at 88.3 billion, up 15% year over year. The operating income is at 28.5 billion, and the operating margin expanded by 4% year over year to 32% now. So Google's margins are actually expanding as well. Net income also came in at 26.3 billion, which was $2.12 in earnings per share. Now, moving on to Google's different business segments, we can see that Google advertising came in with $65.8 billion in revenue. Google subscriptions also came in at $10.6 billion, and Google services total came in at $76.5 billion. Now again, we can see that Google Cloud also came in at $11.4 billion in revenue for the quarter. This next screenshot shows us the operating income of Google Services and Google Cloud. And we can see that Google Services operating income was $30.8 billion in the quarter, which is up roughly $7 billion year over year, or about 30%. Then we can see that Google Cloud operating income came in at basically $2 billion for the quarter, which is up roughly 800% year over year. So Google Cloud is now adding meaningfully to Google's overall operating income. This also means that Google Cloud's operating margin for the quarter was roughly 17%, and it does seem like it is continuing to expand. So going forward, Google Cloud should continue adding meaningful operating income growth to Google's overall business. Now, I also have some screenshots that show Google Cloud's revenue and operating income growth over the past 4 years. So back here in March of 2020, we can see that it was doing about $2.8 billion in revenue, and it was losing about $1.7 billion in operating income for the quarter. Now we can see that the revenue has basically 4x'd, and it is producing $2 billion in operating income. So we can clearly see that Google Cloud is still growing strong, and it is now profitable, and it seems like its growth is actually accelerating. In fact, this next screenshot does show us that Google Cloud's revenue growth is in fact accelerating to 35% year over year. We can see that the bottom of the year over year revenue growth trend was at 22.5% in Q3 of 2023. And then over the next 3 quarters, it did slowly accelerate to 29%, but this quarter was a massive boost to Google Cloud revenue growth at 35%. This is outperforming my own expectations by far, and it seems like the market was not expecting this level of revenue growth from Google Cloud either, because the stock is up 5% in after hours trading, even after Google did see a run up into earnings. So this was a really good report from Google. Overall, the company is absolutely crushing it. And we're going to have to see what Amazon and Microsoft report for Microsoft Azure and AWS in the week coming up here. Because if they also post some pretty strong results like this, especially in their cloud divisions, then it's just going to be great for those businesses as well. But now let's move on to Google's financial statements, and let's start off with the balance sheet. So right here, we can see that cash and cash equivalents is sitting at $93.2 billion for Google now, which is down roughly $17 billion from the end of 2023. Total current assets are also sitting at $158 billion if we want to round up. Total current liabilities are sitting at $81 billion, and total liabilities are sitting at $116 billion now. So Google's balance sheet is continuing to remain extremely strong because they have more current assets than total liabilities by about $40 billion. So if Google wanted to, it could pay off all of its debt and all of its liabilities within the next year. Now, I don't think that Google is going to do this because companies like to have some debt on their balance sheet, but that's just to put in perspective how financially sound this business is. And, it's also generating a ridiculous amount of free cash flow and profits as well. Now, speaking of free cash flow, let's head over to Google's cash flow statement. And there's actually quite a bit that I want to discuss here, because when you take a deeper look into the numbers, you see some pretty interesting things. So right away, we can see that stock-based compensation was $5.8 billion on the quarter, which is only a slight increase year over year from the $5.7 billion they did in the third quarter of 2023. Year to date, stock-based compensation has been basically $17 billion, and it has increased by $200 million year over year. But this is not a significant growth in stock-based compensation. If you have been following Google historically, their stock-based compensation has been growing a lot quicker. So it seems like the stock-based compensation over at Google is slowing down, and I do think that this is a good thing to see. However, stock-based compensation is still very large over at Google, and it is offsetting a lot of free cash flow that the business does generate. So let's skip down a little bit and talk about the net cash provided by operating activities, or the operating cash flow. For the third quarter of 2024, operating cash flow came in at $30.7 billion, which is basically flat year over year. However, year to date, we can see that Google has produced about $86 billion in operating cash flow, which is up from the $83 billion that they produced year to date in 2023. So at face value, it looks like Google's operating cash flows are not really growing that much, and this is kind of one of the bearish things that people may point out in the report. However, you have to take a look at why is the operating cash flow not growing on a year over year basis. And the reason is because last year, I don't know if you guys remember this, but last year Google was deferring taxes to the fourth quarter of 2023. So basically, Google was not paying its tax installment payments throughout 2023, and that was artificially boosting its operating cash flows and free cash flows quite a bit. In fact, last year in the third quarter alone, Google offset $1.9 billion of tax payments that was added to operating cash flow. And this year, Google had to pay $1.9 billion in tax, which is clearly lowering the operating cash flow that the business produced. This is a net difference of roughly $4 billion to Google's operating cash flow on a year-over-year basis, which means that Google would have actually grown its operating cash flows if taxes were neutralized by about 10% on the quarter. If we do the same thing on a year-to-date basis, then it means that at this time last year, Google would have generated about $72.5 billion in operating cash flow versus the $86 billion that they generated this year. This ultimately means that on a year-to-date basis, if you want to adjust the numbers, then Google would have actually grown its operating cash flows by about 19% year over year. So when you factor out those tax deferral payments from last year, then you can actually see that Google is growing its operating cash flows quite well. And in my opinion, the 2024 operating cash flow numbers that we see here are a much more true reflection of how much cash flow Google's business can actually generate. And that's kind of the numbers that I would use here, is these operating cash flow numbers. Now, if we move down to the capital expenditures, or the purchases of property, plant, and equipment, we can see that they are growing significantly year over year, though, with $13 billion of capex in this quarter alone, which is up roughly $5 billion year over year. Year to date, Google has also spent $38 billion in capital expenditures, which is up over 50% year to date. So Google is investing a lot of money into future growth, and this is weighing down free cash flow significantly right now. So what we're seeing from Google right now is its free cash flows actually declining, but its revenue growing at a pretty significant rate at about 15% year over year. So it seems like these investments that Google is making are paying off, and they are growing the top line. The question is, are these capital expenditures a one-time thing, or is this going to have to be a recurring large capital expenditures that Google is going to have to maintain going forward? And I honestly don't know. I don't know if this is a one-time build out or if this is going to be consistent and remain going forward. Now, lastly, we can see that Google did buy back $15.3 billion of shares in the quarter and $47 billion of shares year to date. They also paid out roughly $5 billion in dividends. So Google is using its large cash position and the remaining free cash flow to buy back shares and pay shareholders a dividend. And that is the story of Google's cash flow statement this quarter. So now let's go and talk about Google's overall valuation today. And I did have to do some manual calculations here based on all of the new data that was just released, because the new data is not yet in Stock Unlock. So in the trailing 12 months, Google has now done $340 billion in revenue, $108 billion in operating income, $105 billion in operating cash flow, and $55 billion in free cash flow. So I do have a few different profitability metrics that we can use on Google right now, and I'm honestly not sure if free cash flow is the best metric to value Google's business off of at the moment, because their capital expenditures are so freaking high because they are investing in the future growth of the business. So it could make more sense to either use operating income or operating cash flow. My personal metric that I would like to use is operating cash flow. So if we go to Google's valuation today in after hours, which is $2.06 trillion, and we multiply that by 1.056%, then it means that Google in after hours trading is worth about $2.175 trillion. Now, if we divide this by $108 billion of trailing 12 months operating cash flow, then it tells us that Google is trading for about 20 times operating cash flow right now. So next, I would head over to Stock Unlock's freeform tool and take a look at how Google's price to operating cash flow has been historically. And I typically like to look at the price ratios over the past decade. And here we can see that Google's average price to operating cash flow over the past 10 years has been about 17.7. And this ultimately means that Google, relative to its operating cash flows, is actually trading for a premium right now of about 15%. So the stock, in my opinion, is not necessarily cheap today. And you could argue that Google's stock is trading a little rich today relative to how the market has historically valued this business. So now let's head over to Stock Unlock's discounted cash flow calculation, and let's project out Google's operating cash flow over the next 5 years. And I'm going to say that it can grow at 12% annually over the next 5 years. Google's going to buy back 2% of its shares on an annual basis. The dividend is going to grow in line with operating profits. And the company is going to trade for its historical average price to operating cash flow of 17. Now, with these metrics right here, we get a compounded annual growth rate to the stock of 11.3%, which does mean that if Google can continue to buy back shares, grow the dividend, trade for a 17 price to operating cash flow, and grow operating cash flow at 12% annually, then it could deliver market-beating returns. But this is what the market is pricing into Google's stock today. So when I take a look at these metrics right here, I then ask myself if I think they are realistic, if they're too pessimistic, or if they are too optimistic. And in my opinion, it could be a little bit optimistic to believe that Google is going to continue growing its operating cash flows at this level, given how big the company actually is. But I do tend to lean on the more conservative end when I am investing. And basically, if Google does not produce 12% annual operating cash flow growth over the next 5 years, then it could deliver market or it could lag the overall market. And to put this in perspective, this means that Google would have to grow its operating cash flows to about $184 billion by the year of 2029 from the $105 billion it is producing today. So it's got to grow its operating profits by about 80% over the next 5 years to justify the price of the stock today. So there is some future growth priced into Google's business today. If you believe that Google can grow faster than this, then maybe it's looking cheap. But if you believe that Google is not going to grow that fast, then maybe it is looking a little expensive today. In my opinion, given the fact that Google is trading above its historical average price to operating cash flow ratios, and it does need to grow at 12% annually just to justify the price today, it is leading me to believe that the stock is looking a little bit expensive today, and therefore I do not believe that Google stock is a screaming buy today. So for me, this one is on my watch list, and I would be looking to buy shares of it if it does see a meaningful correction. But at this moment, I'm not really looking to buy any Google shares, and that's kind of just my opinion. But let me know what you think down in the comment section below. Are you guys buying Google shares in after hours trading? Do you think that this stock is still looking cheap? And I would love to hear everything that you have to say. But with all that being said, that is going to wrap up the video for today, everyone. And I do plan on putting out a lot more earnings content over the coming weeks, as the earnings season is basically the busy season for my YouTube channel. So if you do want to stick around and see more content like this and stay up to date with all the earnings that are coming out, then please consider subscribing to my channel, because that would be pretty awesome. But with that being said, that is going to be everything for today. So as always, thank you guys so much for tuning in. As always, I truly do appreciate it, and I really hope to see you all again in my next one, which should be tomorrow.